Welcome on board Hemang Jani as well and find out what he's making of the market right now. Hemang, hi, good morning. A little hopeful with the recovery in the broader markets yesterday. Do you think we're closer to the end of the pain for the overall market fall?
Yeah, good morning, Aisha. I do think Nifty has been finding some sort of support around these levels. It's not really going down, though we do see a bit of volatility here and there. But there is a by and large comfort in the indices like Nifty and Bank Nifty. After a long time, we have seen a bit of a revival come through in the broader market, mid caps and small caps, where the pain was there for past many days. So I think it will be important to see if we are able to see some more stability, in the broader market, because that will actually give a lot of comfort to investors. At the same time, I do think that we have underperformed big time, and there is too much of focus on this FI, sell flows and when exactly it will end. But I do think that the grind is almost at the end, and there should be some stability in the markets because underperformance along with some positive data points are suggesting that we are very very near to a good revival in the market.
Okay, let's start talking stocks now. And just scanning through, well, nothing seems to be popping up, at least, which I can say very convincingly on my radar. But I'll start with power. The HSBC report on Tata Power. In general, there is a lot of pessimism in the entire power sector per se. Hemang, what's changed for power sector? This was like the go-to sector. Suddenly, there seems to be all kind of views which are floating around.
Nichols, typically in any bull market, you see certain utility companies, companies which are generating a stable earnings, let's say 10, 12, 14%. Because of the excessive liquidity, people tend to feel that, there can be a great upside story. Also, we had all this narrative around renewable, solar, and many other aspects. I'm not saying that these sectors or the story is not that exciting. Intervening period when you see excessive exuberance or high valuations, you do go through this kind of a grind, and you've seen that in the past bull runs also. So good that they have corrected. I do think that on a steady state basis, companies like Tata Power, NTPC should quote at a slightly higher multiple given their fundamentals and the incremental earnings that can come through from the new investments that these companies have made. So I do find these levels quite attractive for names like Tata Power and NTPC.
Okay, just want to address what's happening within the auto pack as well. Maruti, M&M, Hyundai, and the SIAM data is a little, cautious. We've been, of course, highlighting what's happening within the EV space. They're also saying that they're bracing for 1 to 2% growth in the passenger vehicle sales in FY26, much lower than what the historical count is. So some of these names are going to be the one, which you really need to take note of. And Kunal, one is seeing that, M&M, one of the leaders in the raging bull market, that also has begun to ebb off, much like Tata Motors, right?
Not much like Tata Motors, but I think yes, the stock has finally shown signs. It started. So there was a point where M&M was one of the strongest name. Whether it is in the first leg of the correction, we call it first leg from September to November, when the markets fell sharply, when auto stocks fell, I think by a margin of 15% broadly, Tata Motors, etc. That was a point where M&M still stood strong. I think in December, if I'm not wrong, the stock actually came back towards hitting a lifetime of 3,200, 300 levels, or very close to that kind of a point. And then now in the last, I think 1 or 2 weeks is where you start to see signs where the stock has shown signs of reversal. The concern for M&M was that the stock was holding on to its longer-term averages. Now that level has been breached for the stock on the daily charts. So which means now we could be looking at a point where the stock would continue to show signs of underperformance. Even on a day like yesterday, where you saw the markets going through a phase of a bounce, at least on the more of the large cap names, stocks like M&M still close into a negative territory. So that itself indicates that we are now looking at a point where the stock would underperform more rather than outperform like what we've seen earlier.
Okay. Zomato, Swiggy, they are holding on. Paytm has made a comeback. And then you've got Angel Broking, which is also looking strong. Let's look at some of those brokerage stocks. Motilal Oswal, Angel. Himang, is there merit in revisiting them because they've come under the sell hammer, so to speak, because of decline in volumes? But eventually, if Indian markets have to, economy has to do well, markets will do well, and brokerage volumes will normalize.
Yes, I do think so, Nikunj, that having seen a 30, 40, 50% kind of a cut across this capital market themes, there could be some interest there. But we must segregate between the companies where people were hoping for a very high earnings growth, let's say F&O or discount brokers. Now, there, how long it take to really come back to the previous high levels and show a meaningful growth? That is something that I don't have too much of clarity on. So I would certainly avoid the companies where the dependence on the F&O volume is very high. But AMC companies, wealth companies, I think that there the story remains quite stable because of the kind of environment we are in. So one has to be slightly more selective. I think BSE, because the volume has gone down, but their premium turnover has remained quite steady. Margin expansion is there, so you find that far more attractive.
Okay. Look out for what IREDA as well as Tata Tech are also going to be doing in trade. Remember, they're going to be included in the F&O segment from the March series as well, new entrants at that. So these stocks may see, some heightened moves perhaps. There's Warrior Energies as well. They've got the supply order of 362.5 MWP solar modules. Look out for what that stock as well does. There's, of course, Bharat Forge, wherein their arm has signed an LOI with AM General USA for supply of artillery cannons now to the US. So, the defense faction of Bharat Forge building up further and gathering more and more orders. Oro Pharma, Orchid Pharma, these are all stocks also which are going to be in focus, because for Oro now, US FDA has issued 5 observations for US's arms warehouse in New Jersey, which have been classified as OAI. There's Orchid Pharma, wherein again the US FDA has issued 7 observations for the API manufacturing unit in the state of Tamil Nadu. So that's going to be the other stock which is going to be in focus. And Naresh, quite a bit of crackdown on the entire pharma space. News-based moves, but you had this same move even on a Piramal Pharma, for instance, yesterday. Any stocks you think can be shorted right now within pharma?
So in pharma, would avoid shorting because as of now, we are seeing more announcement-based gap downs and we see a recovery. So yesterday we saw Aurobindo Pharma correct and recovered all the way almost 80% of the downtake. Same thing happened with a lot of other pharma names yesterday. So would avoid shorting here. Rather, there are buy on dips, some of these names, wherein something like Laurus Labs, which has broken out and retesting that 500, 550 mark. That looks interesting. Even a Lupin did not see follow-up price action yesterday, even after breaking a 3-month low. So for now, it is more a buy on dip, be more selective here rather than shorting.
Not too many gainers actually. I'm literally scanning through something, and after a really long time, Naresh, you have Jio Financials on your radar. I mean, this stock has surprised and they're disappointed. Where is it headed?
So it's more of a bounce back trade. The stock has lost the whole rally. So the stock was at 390 rupees a year back. Now we are at 220. After the listing, the stock had bottomed at around closer to 200 mark. And then another bottom closer to 200 in October of 2023. So the stock price has gone nowhere. We are back to the same price. A year and a half has gone. And now looks like an interesting case for a bounce back from here. And yesterday saw a recovery take. So flat for a year, but down 40% from the top. So I think it could bounce back at least to 250, but could also be an interesting longer term entry point.
Kunal, Jio Financials?
I would look at just about waiting for the stock. I would not suggest to go for a buy over here, at least on the shorter term charts, because of the underperforming nature of the stock and the weakness the stock has been showing. So when you see consistent pattern of lower highs and lower lows, there comes a point when the stock gets into the process of a bounce. But then if the overall trend is on the downside, then generally we see that stocks face a sell on rise kind of a pressure. So my view could be a bit different.
Nothing much actually. Seriously, I mean, you just have to scan to find something nice and interesting. Uh, what could be a bounce back trade according to you, Hemang? I mean, would you say that could be PSUs? Could it be good old classics like Capex and Infra? What it could be a bounce back trade according to you, Hemang?
So Nikunj, ultimately the market will, move towards the guys who have shown a very solid earnings growth this quarter. Now, valuation, definitely people can debate and, in times like this, there can be question marks on whether certain valuation is justified or no. But, eventually you can't make big money holding on to Kotak Bank and Bharti and Sun Pharma, right? So I do think that, names where you've seen a massive 30, 40, 50% kind of a correction, something like a Trend or a Dixon or a Polycab, and some of the capital goods companies which have fallen, let's say ABB Cummins. Now, Cummins numbers were extraordinarily good. The management guidance is looking quite both on the export and domestic front. The stock has corrected almost 30-35%. So I think one will have to move into something like this trend 35-40% growth in a most difficult environment. Surely, because of the over ownership or whatever you may call it, the stock is corrected 30-35%. Eventually, I do think that whenever the market stabilizes, see these stocks really outperform big time.
Yeah, quite a few downers there. ITC, like we just flagged off, that's going to be the other, big one to look out for. The Economic Times reporting that cigarettes and tobacco GST may actually be up to 40%. Versus the current 28, and given that for ITC, X of hotels now, the large chunk of the revenue does come from the tobacco business. This could be a big dampener if it were to impact volumes, of course, this high GST. That said, looking at some of the other stories in play, look out for a BSE. This was one of the big movers yesterday, and the fund data, entails that Goldman Sachs actually bought 7.25 lakh shares in BSE. So there was a block deal yesterday on BSE. Other than that, we've been flagging off Maruti. There is a new midterm plan which has been put in place by the management. So look out for that as well. And M&M then, wherein the Mahindra Group and Anduril have partnered to develop autonomous maritime systems and AI counter UAS tech as well. So these are a couple of stocks which are going to be in focus. But let's just address some of the other buzzers yesterday. A bounce coming in on a BEL, for instance. L&T held out quite okay. There was an Axis which was looking okay. And Eicher Motors, which also sprung up about almost 2%. Naresh, I was asking Kunal this, just last afternoon, whether the leadership has now changed hands within Nifty Bank, and has it moved now out of ICICI Bank and HDFC Bank, which were the go-to for the last 2 years?
So I would say it has moved from ICICI and SBI, which were the winners post-COVID. So post-COVID, there was a change in terms of leadership. Pre-COVID, it was all about HDFC and Kotak, and ICICI would be the third one. And now we've seen HDFC Bank taking some lead in the initial part, but it's Kotak which is coming at a 3-year high. So, but ICICI has not fallen off the tracks. It's not corrected sharply like the rest of the banks. So ICICI could still be a leader. SBI has actually corrected more. So for now, it is Kotak Mahindra Bank being the first one in terms of a trend. Second would be HDFC Bank. Third would be ICICI, and fourth would be SBI.
When it comes to the banking space, but let's go across and also listen into the top market voices of the various themes that they are betting on to navigate the market volatility.
Big correction, so valuations is in your favor. There is a pharma space which is really looking good. Again, in this market, there has been correction. Gold finance looks pretty good. Home finance looks decently good. Luxury real estate, is looking good. And I continue to like, the building materials. Building materials, again, I think it's going to be a, really high growth time for a lot of niche building materials.
In healthcare and all, it's more of a stock-to-stock situation. So I would kind of, pick and choose. But in general, in our portfolio, we are still quite overweight on the healthcare space also. Structurally, we are always more positive on the premium end of the consumption basket, whether it's in services or or products, services like airlines, hotels, a lot of things to do with travel and tourism and other services. And on the other premium side, you have spaces like gems and jewelry, you have high-end auto, high-end real estate, etc. So those should continue to do well.
Consumption incrementally is where one should look at not just staples but otherwise discretionary. Although that's a space that we currently do not have, but consumption in general is a place that one should look at, because this is a space which has been largely ignored over the last so many years in the large cap consumption space. Right now, it doesn't really look like commodity stocks have done so much. There's been a lot of worries around tariffs, etc. As things settle down, I think valuations over there are also looking all right. Banks is what we like, but we do not like it as much as we used to.
We upgraded post-budget consumer discretionary X passenger vehicle overall, and we, you can say, booked profit or neutralized our overweight on industrial sector. That made us overweight now on financials, consumer staples, consumer discretionary X passenger vehicle, healthcare, and real estate.
Okay, those are some opportunities where our market experts are currently spotting in trade. But Hemang, what's looking attractive to you? And would you recommend buying anything right now? You did highlight and flag off some of those, mighty giants which have seen the 30 to 40% correction, a Cummins, Trent, etc. Anything within the small and mid caps, or would you say, one is safer with the larger caps, if not pure play large caps?
I would tend to go with companies where you see good earnings this quarter, as well as a bit of clarity on the growth going ahead. So some of the defense names like Bharat Electronics, HAL, I think for some or the other reasons they have really corrected quite a lot. Around budget time, people had concern that not much of focus was there on the capex, but the defense budget has been high, almost about 12-13%. Also, this US treaty related thing, I don't think there is going to be a materially negative impact on earnings for names like BEL and HL. So now that stocks have corrected, you're seeing a bit of bounce come through. On most of the earnings parameters, I do find Bharat Electronics and HAL attractive at this point.
All right, so within the defense space, Bharat Electronics as well as HAL are something that you can look at. But today, of course, all eyes will be on NHPC as well after that upgrade coming in from CLSA. Kunal, this too has been one of those beaten down names, but believe that after a long time, we are getting to see an upgrade, though CLSA has cut its target price marginally. But what's the chart check as per you, and how is the technical setup looking like?
Well, it's still on the weaker side, Srishti, because the stock fell from 115-20 levels to almost 74, 75 thereabouts where it's trading right now. So on the short-term charts, it's forming a sort of an RSI divergence. But the fact that the stock is not finding a major support, the correlation with this overall market, even the mid cap and the small cap index, even that has dropped significantly for NHPC. So which means we could be looking at a process of a minor bounce, but then eventually I think the trend for the stock should resume on the downside. So I'm not too much enthused with the kind of stock patterns for NHPC. Maybe closer to 78 to 80 mark. If the stock happens to bounce back to those levels, that would be a point where traders may trim some positions over here.
All right, that's about NHPC, but just also let's address the pre-market open rates, because for now it's been a shade of red that we are seeing on the Nifty 50 on the pre-market open. All right, it's trying to settle a bit, almost a flattish start is what we are witnessing right now. But Hemang, onto the chemicals space, what's your take? Because on the earnings front, we have seen quite a mixed bag. Some companies definitely surprising, but some earnings were actually a disaster. Any specific segment within the chemical basket that is looking attractive to you? Hemang?
Bag and even earnings were mixed. So I would rather want to wait out for more clarity on the impact of the tariff and the current prices which are there, because stocks like Navin Fluorine or SRF and certain pockets have actually remained quite firm. But getting too much of clarity about what kind of earnings can we really see over the next quarters. So while there is a lot of news flow around it, I am staying away from this space till we get more clarity.
Okay, Hemang, so good having you on the show. Thanks as always for your time.
If you like this video, then like, share and subscribe to ET Now.